All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for Friday night. Merry Christmas edition for December 22nd, 2023. Got a 3-day weekend coming up. Christmas on Monday. Kids did a great job at Soccer Academy tonight. I'll feel it tomorrow. As always, we'll start with our hybrid swing portfolio with Alcoa on 30-minute chart. So this was yesterday's entry, and it closed well. So with an R in hand, we kept it, and today it gapped up to here and rode all the way up to the top quick and then started to fail. So I cashed it here for a total of 3, 4, 5, 6. That's about 6R. It sold off to a low of the day and then started to resume. And as it was getting ready to cross the VWAP, I re-entered here. It ran all the way up and tested the previous high, then started to roll over, hit the skin of the dragon, and that was enough for 2 more R. So that brings home 8R and no overnight risk. AI, a quick short from the open, then it really just kind of meandered around for an R. Amazon, we closed the short, or I'm sorry, we closed the long, which was a SSC from yesterday. We closed that one today for about half an hour. Caterpillar, quick scratch. Cliff, this was like a gap up and go, and then it rolled over, started to fail. An owl entry short, essentially, and then cashing it for about an hour later on the drift. CVS, whoops, sorry. That one is still open. I felt like today there was no selling pressure, and I liked the way that it had run up earlier in the week, so I'm holding that one. Disney, owl entry short, 2R going into the close. Dish Network, emerging dragon. Why is that an emerging dragon? Well, because we have a low, a higher low. So that would be a successful trade. Then this would have been a COTA 2 right here because it is below the peak of that RL10. This is the pocket. That would make this a COTA 2 entry. But because we get it after it crosses the peak of the RL10, that makes this an emerging dragon. What I liked about it was it had this run up, sell off, and then resumed. So this almost felt intraday like another COTA 2. And then when this peaks right here, we just take it, take a dragon exit. All that work for a third of an hour. Devon Energy, we closed the SSC for 3R. Missed the afternoon sell-off. Electronic Arts for a fraction. Emerging markets, no trade. This is Ethereum, a gap and go. It completely cleared the previous resistance. Moved nicely during the day. Didn't want to hold it over the weekend, so we took 2R. Mexico, owl entry short. for about an hour. Was not a lot of movement in the afternoon. People getting ready to go home early for the holidays. A quick COTA 2 for an hour in Brazil. Intel, we closed the 2-day COTA 2 trade for about 4 hours. That was a nice one, a nice 2-day move. IP, we tried the SSC. It ran up, but then started to fail. That was a quick scratch, then nothing. Real estate, gap and go, a quick nothing. A lot of failures to follow through today. Coca-Cola, fractional gain. Quick scratch in regional banks. No trade in Mattel. Closed the COTA 2 here in McDonald's. That started yesterday. Today it just started failing. Took it at the edge of the river, or edge of the dragon, sorry, for about an hour. Merck, gap and go, and then a quick fail. Kept a little piece. Microsoft, quick scratch. This one was interesting. The short that we held overnight on marijuana never really paid off, so we got out of it with a scratch. Then in the afternoon, there was nothing else moving. I mean, nothing. And then this one triggered an alert on an emerging dragon, so I just wanted to do something. And then bam, it just exploded. On the 1-minute chart, it's as orderly a move as you could ever want. And that gave us a quick 3-hour Christmas gift. NVIDIA was no trade. Clean energy was a quick COTA 2 for a half an hour. Rivian, COTA 2 short and a PSAR flip, and it was turning to winter, so we squeezed a little more than an R out of that. The S&P had some late afternoon panic selling, but there was quick buying pressure right away to equalize it for the day and for the week and going into the holidays. Treasuries, I looked at the gap up and then it started to fail, so I considered that one as it was rolling over. And then I thought about it as a collapsing dragon, and then I didn't take the trades, and then I watched it. Probably the move of the day, the only one that really had a strong directional basis. Tesla, we covered the SSC for a little over an hour. I thought about the short, didn't take it, and then it collapsed. Walmart. This was a nice gap and go. We already had one in it, and I had span of control issues, so I just watched it grind sideways, waiting for a breakout to add a second position. It never materialized. When this rolled over, I gave it a little bit more room than otherwise I might, but had to take it at the VWAP, and that one cleared about 6R in Walmart. Nice trade. And then U.S. Steel is continuing just to grind. This is the Walmart 3-minute sniper trade of the day. So we had a gap up, and there's your OR3. In the next piece, it broke out above the OR3, so we're long on that one. Now there were two choices. The R10 is half of the OR3. If you use that as the stop, as your exit signal, there's no technical reason on 30-minute chart or on a 3-minute chart why that signals that the long side move is not there. So it's not really a rational choice to make that your signal to escape. So the actual signal to get out of the trade would be falling back through the PSAR, which means that's the appropriate one execution R. So that's what it is. And that just means my position size is half the size that it might ordinarily be. Because if I set, I gotta still be able to see 2 units of reward to the upside, which is reasonable given the range stand. So just to make the point that if you have a big gap and a big opening range 3, the the price that signals the move is over falls well outside the OR3 and well outside the R10. So in that case, I choose the signal to be my exit, so that I'm, otherwise, if I were to get out here, I'm getting out inside the noise, and that becomes a bad habit to cultivate. You don't want to cultivate that habit. All right, so there we go. By this time, we should be at no lose plus dinner for 2. I take the the the, the dragon spine. Oh, excuse me, the dragon spine exit. The kids wore me out today. Caught a 2 re-entry. Fractional. You can feel the steam running out of it as the market wants to go home for Christmas. Caught a 2 re-entry. Nothing. And then nothing for the rest of the day, really. So that gives us about an R and a half. Execution R and a half. Now this one is this is Alcoa, and we spent a lot of time on Alcoa yesterday, working this trade, setting that up, and yesterday's trade of the day worked us through this, and from that, I think, if I remember right, we got 2 or 3R out of that, and so I was willing to keep one of those to pay for a swing trade with that as my entry, and with about an R in hand of market's money, given that's a normal risk in Alcoa. So, item number 1, this solid blue and black line here is the 30-day high as of yesterday. Okay. And yesterday we said, because of the way this closed, be prepared for a sudden surge from the opening if it breaks loose, and then be ready for a quick harvest, because there was a probability that guys were going to want to smooth off their positions and not carry a lot of risk over the holiday weekend. So they wanted to relax a little bit. So there was a good chance for exactly what happened, which was a gap up and a quick go, and then a quick rollover, in which case we did a quick harvest. So that was one of the scenarios we talked about yesterday. And so here was a previous routine trade, which we cashed. We didn't hold overnight. Here was the next day. There was a routine PSAR flip and a caught a 2 short, which we then, we were willing to carry that one overnight, and then it really just went nowhere. So we cashed a couple R. Then the next day there was nothing until the breakout occurred, and we got a nice little entry, and we were holding one swing position. So it gaps up, big gap up, breaks the 30-day high. So we add a second position, plus we've got more than, we've got almost 4R in hand. And then that runs up to 5. That was the buying burst that took it north on 2 positions. And then when that rolls over, can't make a new high, breaks back down through the close, and then closes in here. That's why I elect to get out right there. And that gives us, on those 2 positions, entry 1 and entry 2, that gives us 10R. And now we can stalk. Is it going to come back to the previous 10-day high and then resume? I don't know. I don't think it did anything. But the key point on all this was the setup from yesterday All of these trades are just routine, setting it up and then deciding to hold it overnight or not as a function of trade location, and then do I have a cushion of market's money, and then visualizing what might happen tomorrow, or which was today, that special case of a gap which cleared the previous 30 period high. And then we were prepared for what to do if that became the case, and it allowed us to bank 10R just by executing exactly what we rehearsed. Alcoa, number one in our hearts. All right, only had one chart posted. George also trades Alcoa, does a nice job here. Now, he was not carrying any position overnight, which is fine. And what did he do? Gap and go, gets the position on a standard risk, plays the 2R battle drill, plays a 3R battle drill, it rolls over, he doesn't wait, gets out, and those two scratch each other. So he nets 3.2. Yeah, I don't think, I think that's a good wave off. The only reason that you might take that, you could talk yourself into, was if that represents the quick harvest, you're not expecting a lot more buying pressure. I mean, there actually turned out to be. But, this was mostly a sideways market all day. I think what you did was exactly right. Collect 3.5R, 3.2R in the first hour and call it a day. Nothing wrong with that. That was well planned and well executed. Nice work. In the weekend report, bullish normal, strongly overbought, normal volatility. It's favoring the risk on. We're in a strong bull. 100% exposed in ETF2. All of these guys that are the current leaders have been crushing it this month, I should say. A nice closure to the year. In the RLFF regression line fractal, the RL90 is poking back up through its previous peak. That's a very strong sign for the longer term. When the RL90, remember, which is the RL30 for the next higher time frame, is now moving from the pocket to the emerging dragon, it's being pulled north by the RL10 and the 30 and the dragon. All that stuff is looking good. Now the RL90 is going. That's very good. And notice that the RL270 is also good. So this is already right now the strongest condition of the market in the last 9 months, to be honest, because you had this nice run up July and August and then suffered. That was enough suffering to cause the 90 to roll over. This resumption, which has been a historically strong move, was enough to give you the RL30-90 crossover, which was enough to put a base in for the RL90, which has made a move. This little sell-off here was enough to keep the RL270 from going up, but just made it go sideways. And now lately it has rejoined the move up. So the 90 is coming back up. Next week it'll probably cross above the 270, and then everything will just be amazing. This has been a nice summer, just starting in the summer. This thing still has room to go. Believe it or not, this last week, there just could be some nice tapering off and finishing, fit and finish type work. The 3-day. These are 3-day bars. All summer, all good. This is the 9-day. This is the all-time high. We're getting pretty close to that. Pretty strong. Kata 2s all the way up. So the 3-9, all systems go. These are daily bars, the 150-day look back. Everything in the top of the 150-day look back. This is that all-time high that carries over. This is the 150-day look back, the low and the high, which has all occurred within the last 40 days. Here's your 30-day box, your 10-day box, your 5-day box, and then today. Everything looking good. Nice Christmas present. Blended monthly rebalancing portfolios, all U.S. all the time, with a little bit of Australia and real estate and some Latin America thrown in. Tech. That's the growth portion of the U.S. economy right there. Small caps have been on a tear. Sort of a stealthy move after 2 years of underperformance all of a sudden. Energy at a 3-month low. Let's see. Yeah, no difference there. In the Dow, it had some strength in Intel, Boeing, AXP, Microsoft, the usual suspects. Let's go to the daily. Yeah, I've seen that. Seen these. Not much else to choose from. Today was really kind of a quiet day. One strong breakout in Intel. That's really going. I'm proud of the fact that we've been able to catch that turn. That we saw that one coming as it was coming. We didn't predict it, but we adapted to it. And Walmart making a nice recovery run. We've been able to exploit its oscillation. Auto framer, nothing usual to speak from. We're in the pinches. Yeah. Pretty strong finish to the markets. You know. Intel and the metals really leading the way. Strength everywhere on a drift up. That's a picture of complacency and strength, and have a nice Christmas. That's how we're gonna stabilize right here. The 30 has cooled off just enough, but it's meeting everything at the top. This has been enough of a cool down that we could see that next week. That would be the least surprising move, because it maintained this week above that key resistance level. So this is still all good. And I think that's everything. All right. Merry Christmas, guys. We'll see you Tuesday. There are some of you guys on Sunday morning for the Foundations and Creativity course. The last Foundations Q&A was just outstanding. We did a 90-minute session where we took a look at interpreting and integrating the work from Luke, Jeff, and Sonal, and I thought it was exceptionally well done. If you put together their 3 briefings from the research weekend plus that little coaching session, that thing is basically an advanced foundations course, all on its own. I mean, it's pretty good stuff. All right, fellas, take good care, and Merry Christmas. We'll see some of you on Sunday, and then Monday night, nothing. Just Merry Christmas. And take good care. Merry Christmas.